What's going on, traders? This is your host, Colton, and as a friendly reminder, this is not financial advice. This is simply a recording from an intraday trade idea on the S&P 500 from this morning, so enjoy. These videos can get fast-paced, so make sure that you pause and play as needed, but what we're looking at here is the S&P 500 on a 15-minute time frame. Now, what I pointed out in the top left is that the daily and the FAR time frame are bullish, but with London's price action and schematic that showed, we could continue to see an intraday sell retracement. So as we start at the top, we had Asian session liquidity form, and then we see some nice buy to sell candles through that liquidity, having a nice distribution to the downside. Now we sold off into a bigger pool of money, bigger pool of liquidity that I have pointed out there. And at this exact point, it's about 9:35 a.m. and market just opened at 9:30. So as you can see, that pre-New York consolidation. And now what we want to do is wait, right? We want to wait these next 15 minutes and see what kind of volume that this candle is going to bring into the markets. And that's why we haven't already executed on anything. I just pointed out some imbalance we have to the downside below our liquidity. I just pointed out 33.63. If we had a high volume candle run up, we could see that entry. But look what I write here. Market could decide to just sell off as the previous 9 hours of price action has clearly cleaned all imbalance to the upside. So you guys will see this on the chart here, right? There's no big imbalance areas. Even though I pointed out those two candles, we necessarily don't have to go trade up that high because the volume of this open, of this 15-minute candle, isn't that great. So that's just helping us for a later setup that's going to come in this, in this video here. I'm going to show some correlation now, right? We're waiting for that first 15, last 15. Do a little correlation with the other indices, right? If I want to see the S&P 500 go down, what do we see on the Dow, right? We have that same Asian liquidity pool, right? We had that London drop low. So a continued lower movement is definitely probable. And again, this isn't, one of the sniper entries. This is more of a continuation sell entry that we took. Here's the NAS, right? You see similar price action. So again, nothing sniper here, but this is just continued. Look, daily bullish candles, 4-hour bullish candles, but we had that 4-hour engulfing to the downside. So we could just get, maybe some of the biggest retracement from this week that we can have. We'll go through some smaller time frames later on, and that's really for you all to study, right? This is more of a longer time frame analysis that I'm going to do for you all. And again, it's about 9:37 a.m. So we're really waiting for that 9:45 hour to watch price and see what happens. Again, consolidating at this 33.50 price. So this is where, again, you just really want to be patient and wait. There's no setup on the indices, in my opinion, right now on this 15-minute time frame. So I'm going to allow these first opening 15 minutes of the market to go ahead and show me what's up. And we just wait. So now as we get closer to the hour of 10 o'clock, we see some downwards movement. I'm playing in between my time frames here, right? Still waiting on our hands, and I promise this sell setup played out pretty beautifully, so definitely stick around. So I say if this 5-minute candle closes bearish, I'll be confident for the sell in New York. We did close pretty bearish, and then the market started to retrace back up. So don't focus on the money amount here, right? This is just a paper trading account on TradingView. But as price goes and trades back through that 33.50, right, I'm going to enter that continued sell position, right? Now you may be asking, Colton, why aren't you waiting for those higher prices? Well, like I said, that 15-minute candle didn't bring a lot of volume to the markets, so I don't necessarily need the market to get up to 33.63. If I use proper risk, right, I threw a stop loss up at 33.60. right above those highs, entered at about 33.51, so about a 9 pip risk, and I'm targeting 33.25, so for 25 pips. So as it pushes through that, as market can get through that imbalance and through that 1 to 2, 1 to 3 risk to reward. So we see what did market do, right? It ran up above those little bit of highs. I actually pointed out the 50% of that last up to down candle inside of our pre-New York range. And market closed pretty nicely on that 10 o'clock hour, and now we're pretty much just waiting, right? Stop loss there. Market is trading down as we trade below. So I say as we trade near and below our liquidity, I'll reduce risk to the most recent high. I would have moved it there if we would have went and made a new low. Now, as you can see, we didn't quite tap that 50% to the upside. And again, this is a continuation sell position. So what market does here is it actually decides to come trade up and into that 50%. And you see me take another entry here. So this entry right there at about 56 with a stop at 60 was another 4 points of risk that I put on for overall 14 points. And again, that was because the market was coming up and trading into that 50%. If market breaks through my stop at this point, I have to accept that and understand that that higher time frame bias is overall just pushing the market to those higher prices, and we didn't need to retrace further than what we already have in pre-New York. But, now over the next 15 minutes is this candle really just hangs out here and just stalls and just waiting for some volume to get into the market, because as you can see, even since I've entered, there hasn't been a whole lot of movement either way, more bullish and bearish, but nothing significant. And then also understand the power in this 15-minute candle to the left, where we're playing off the 50% right now. Know that on smaller time frames, right, that's where that second entry came in, right? That second entry is based on a 5-minute, 1-minute imbalance and up candle, right? The highest that the market just made, a couple seconds ago that you saw there, played off a last up to down candle on the 1-minute time frame. So you guys are watching this play out on the 15-minute, and in my other videos it's been on a 5-minute. But I just wanted to show you kind of a bigger overall time frame push here, right? It's not always about the 5-minute, 1-minute time frames, and that's why I allowed the drawback on this trade, because it wasn't a smaller time frame entry. Only entry number 2 was. So as you see, this 10:30 hour really gave us some fun things to work with. We pushed below all those pre-New York lows and pretty much equaled out some money we had over to the left side. So, right now we're floating about 7 points in profit from that original entry. So what I'm going to do is clean up the chart a little bit. Right, there's entry number 1. Entry number 2 came right about there at 56.5. Stop is still up at 33.60. Equaling out this pool of money here, right? They've effectively traded into it, probably creating another pool of buyers, right off of that support level. And now what I believe I'm going to show is you have to allow the market, right? So I'm showing the importance. So this will be a great candle, right? I was telling you guys earlier to break down on smaller time frames afterwards. As you can see, the high it made was respected. Hence why I decided to sell early and not wait for it to be broken above. So if you stuck around to the video, I know you're probably getting some good value from this. So again, 50% was tagged there. And we really started pushing down. So already a 1 to 3 from that top entry. So I'm pretty sure I go ahead and scale. I take about half the profits off of the page here because of that second entry, right? It was almost a 1 to 2 on the original entry there. And now what I'm going to do, right, is you could decide to go break even at this point, right? There's already partial scale. A lot of people will. But as you can see, there is imbalance that the market could come retrace into. And with indices, sometimes I don't get in and get out within 1 to 2 hours because they have a lot of movement between that 2 to 4 p.m. time frame as well. So I would have loved to hold this. So as you can see, we effectively cleared that money to the left side with the check mark. I moved the stop loss down to 58, right? Just 2 points down effectively from that recent high. And we're going to continue to let the market, play out from here. And with the partial scale, even if the trade were to go hit the stop loss that's on the chart right now, hopefully you're still at a break-even day. So again, never let a winner turn into a loser. I should be breaking down a smaller time frame here. I'm going to show you guys, right? Look at those 5-minute candles. Look at this 1-minute play, right? We have this last up to down candle. Look at that mitigation right there, and it was over from there. And we actually exited on that last down candle right there, which was, just again, a great exit. It was about a 5 to 1 from the entry number 2 and about a 2 to 1 from entry number 1. So very nice there. So now we definitely picked up some speed. I think on about 20 times speed, as you see the clock running over there to the right. And now with the partial scale, right, we're just allowing, okay, now is the market going to pull back into that imbalance, right, to the upside and retrace into where we sold off, or is it going to continue to drive down? And let me go ahead and take 30 seconds real quick while this 11 o'clock hour hangs out around 33:38 and just say that your biggest challenge isn't reading these charts and these markets, right? Your biggest challenge is your detachment from the money. If you've been focusing on the money amount that's being shown here, that's all demo money. That's all fake money. That's not what this is about. This is about understanding price action. And when you learn these concepts that are taught inside of this channel and other channels, you need to know that whether you take a loss or whether you take a win, it should be based around those concepts. And the only reason why I would have lost is because I started thinking in a retail way. And then later, in hindsight, I find out how the banks really wanted to play. So always, always remember that. Now, I do a really cool thing with the fib here to go ahead and reduce some risk and go break even. And what I do is I take it from the recent high down to the low that was just made on that 11 o'clock hour. I find the 50 and 61%. And since that 61% was right below my entry number one, that's where I go ahead and move my stop loss. So now I've gone break even on the trade. So if the market comes and trades into the open of that white candle, then I'll go ahead and take the profits that I've already created. If it goes up and just trades into the wick, then I still have the opportunity to bring the market even lower. Now I skipped the close of that 15-minute candle, and what this one does was we reach a little bit higher near the break-even point, but the last 2 minutes of this candle shows very clean bearish action, and we close down near that 1 to 2 risk to reward. So now I take my eyes over to the imbalance. I'm going to go ahead and mark up the 50% of that just for a quick reference that I know, the institutions might show evidence of just some, slightly bullish movement off of that. Pretty much still waiting for that second scale to happen. This is also a great time, right? You're over a 2-to-1 ratio. As you see, what I'm going to do is move my stop. Now that we've created a new lower high, I'm going to go move that stop down there, because if the market were to go trade above 33.44 now, I'm not interested in that sell position. 50% imbalance, and I should be taking my second partial here. Yep, so I take another half of my position here, so I've closed out 75% of it. I didn't quite get it on that 50% imbalance, but again, it was a good 18 to 20 points both partial closes, so very, very efficient when it comes to this. I should be showing, right, we're just going to look at some smaller time frame price action to the left of our 50% in imbalance to see what we were working with. We see the clean buy action that had happened through the beginning of the week, right? Sell to buy, sell to buy, sell to buy, and then we took off. So other than this 50% at 32.22, there wasn't really a whole lot to look at. You see on the 5-minute, right, we had a nice buy to sell candle. As we go down to a smaller time frame, what did that 1-minute candle do? It breached this pool of liquidity, right? One candle up, and then we had our fat second sell off continuation to the downside. So overall, right, very nice trade. Even from entry one, right, we went 20 points for 10 and risking 10 points. So even a 2-to-1 on the original, yes, we came very close to stop, but overall, right, for this continuation on smaller time frames, you could have had a more fractal entry. So other than that, market continued down a little lower. We ultimately played into the open of this institutional candle over to the left that's highlighted with a blue box. Found support at about 33.28 where I had my original take profit, but since I was stepping away from the computer, I wanted to move my take profit down to 25 to maybe run an extra couple points to show you all. But overall, the market found support and went ahead and traded up above that 33.44 level, and was closed out of the rest of this position and stop profit. So I appreciate you guys for tuning into this video. Hopefully it gave you some insight to the indices, right? You see this same movement happening across the board on the other indexes as well, right? The Dow Jones, the NASDAQ 100. A lot of people always asking me about the NAS, right? The setup on the NAS might not have been as clean as this one, or it might have been cleaner, right? You guys can send me over your thoughts, your charts when it comes to 15, 5-minute, 1-minute, even your higher time frame bias through Instagram, even through Telegram. I'm pretty good with answering through Telegram, but I appreciate you guys. If you enjoyed the video and haven't already, smash that like button for me. Go ahead and subscribe. Even hit the bell if you want to stay notified on my future videos, and I hope we all continue to have an amazing trading week. Remember, it's an important week. We have the non-farm employment change on Friday, NFP for the US dollar, and that is going to call for some very high volume, more than likely. So nothing wrong with this being a study week, right? As you all may see through some of my messages, right? I take maybe 20 trades in a given month, right? There's normally 20 trading days. You guys could look for maybe one setup a day. Sometimes it doesn't always happen. Maybe if you look for 3 to 5 setups a week, right? Then you take 15 to 20 trades a month. And if they're high probability, then again, guys, your risk to reward and the compound that you have on your accounts should be astronomical, especially if you're part of the daily mentorship, because the amount of value that gets given through the IM Academy is absolutely insane, and I appreciate every single individual that has helped me across to this way. So I love y'all. Let's get it. I'll see you in the next video.